What's up, everyone? Praful here, and welcome back to yet another episode of Decluttered, the Candy Traders podcast. And I have Shreyas alongside me. And in today's episode, we have a very special guest, Mr. Anand, who likes to call himself Anandable Anand. And as quirky the name sounds, his tweets are equally quirky. So if you have not been following Anand on Twitter, you must definitely follow him. And Anand, he has been in the markets for last 15 years and he works for institutional trading firms. So that's going to be the essence of today's podcast. We're going to learn a lot about how institutions work, what's their modus operandi and whatnot, because everyone talks about FIIs, DIIs, big players, ye kar rahe, wo kar rahe, but nobody actually knows how actually they work, because there is not many people who have the in-depth knowledge, I mean the inside knowledge of how the institutions work. So today we are very fortunate to have Anand with us. Anand, thanks a lot for taking your time and engaging in this conversation with us. Welcome.
Thank you, Praful. Thank you, Shreyas.
It's a huge
Uh,
pleasure to have you with us, Anand. I've been following your stuff on Twitter. Some really nice stuff out there, and I think today will give us huge insight into your journey as a trader. And 15 years is a long period of time, and really looking forward to how this plays out. So thank you for doing this.
yeah, thank you, man. And yeah, it was a really tough journey and pretty unusual, you would say. I would start with the first incident which I remember about stock market. It was near Harshad Mehta's scam, and I was like 10, 12-year-old. And I clearly remember telling my dad used to dabble into stocks during that point of time, and UTI mutual fund at that point of time, which was like master gain and master share. And the moment I heard about stock market, and Harshad Mehta was a star icon of every household, and I wanted to be like Harshad Mehta. And I told my dad that why are you investing in mutual funds, and especially the new funds which come out, and why don't you invest in companies like Colgate, or companies like Wipro, or companies which are growing at 20-30%. It will give you
You
more
were
than
12
the
years
FD
old.
return.
You
Yeah,
were
I
12
said that,
years
and
old, and
I'm
you were
not kidding.
giving
And
investment
yeah,
advice to your dad. Oh my God! Wow.
and
Okay.
yeah, and
And it's good
I
advice.
still. And my dad said anything which is of 300 rupees or 400 rupees, it will not go three times, four times from here. But this 10 rupee mutual fund, it will go like 50 rupees, 60 rupees within no time. And this was the Harshad Mehta time. And I don't know whether the logic holds true or not, but this is what he said. And he said, don't think about it, because stock market to jua hai. It's all gambling. So then my dad lost a decent sum of money after the scam, I think, and he started investing only in fixed deposits and bonds, and never looked at stock market at all. He went into real estate and all that. And whenever I try to ask a next question, he always discouraged me, saying, "ये तो पूरा जुआ है." So when I was and like he
Something
discussed,
like
I mean,
PTSD.
I love my parents, but
Something like PTSD.
yeah, you can say that. And I love my parents and whatever I am because of my parents, but I'm telling you the incidents as it happened. So my dad was like strongly against stock market when I was a kid, like super strong against the stock market. And he used to get this yellow newspaper, and at that point of time, prices, EPS, P by E, all this used to be published in the Economic Times. So he had keen interest. He used to underline and all, but he never invested after that. And I remember I was 14-year-old. So this burning desire of getting rich quick, it was like there in me from that age itself. And then the fad came of lotteries. So I was in a hostel, and I started playing lotteries. I started borrowing money from friends, family, from wherever I could.
The
And
Thunderball and a few others, right? Something.
Plevin.
Those were the names,
mon- no,
if
these
I'm
were
not.
like actual physical lotteries, Sikkim Manipal lottery and
Ha,
stuff
Sikkim
like that.
Manipal, yeah.
These were like
Okay.
government lotteries, because
Okay.
all these smaller states, if you want to like get into it at a granular level, all these smaller states, they didn't have much of revenue at that point of time, so they were allowed to do lotteries, and those lotteries used to get distributed all across India, and results used to come. You get a prize if you guess the last number right or last two number right. Just the game of probability. I was not aware of all that, but somebody told me that you have to track the number which is not appearing now. It is going to appear. It is going to appear. So I started
Gambler's
tracking those.
fallacy.
Yeah, I started tracking those numbers, and but the good thing is, and I'm not kidding. I mean, in this journey, a lot of pain is there in the future. So I'm telling you everything honestly. Good thing is, I was not like betting randomly. I was losing small amount of money, but I was losing
Hmm.
like every day, every month I was losing, and I was under huge debt around 1,800 bucks or maybe 2,800 bucks. I don't remember exactly, but I was fearful that my dad will find out, and my friends, family. Like I was running out of options from where to borrow, and I
You were
decided I prayed.
14.
Yeah,
Yeah, that's a
I
huge sum at that time for
At
that
that
age.
time,
Yeah.
yes, of
yeah, and
course.
that too. This was like 1994. Okay,
Okay.
94,
Yeah.
95. So then I decided, I prayed to God that just give me one good luck, and let me break even, and I'll never ever do lottery again. Okay, this was the idea, and I was like betting every day, $10 every day, and I got a jackpot. Okay, I nearly made break even,
Oh,
and
nice.
that is the point. I decided never to do lottery again. Okay, and
Oh, at least
so
at
the
least you
lesson
stuck
I
to your
learned.
decision. So that's
Lucky break.
yeah.
Because most people
Yeah,
will
I
be like,
mean,
I'm
I
going
was
to
waiting
break
for
even
that
now.
luck. And you know how it used to happen that everybody once in a while, the jackpot is like getting two numbers correct or three numbers correct, and once in a while everyone who was doing lottery alongside me was getting it, but I was not getting it. So I
Hmm.
was like, bus mera number aa jaye and then I'll quit. May- God just let me be break even and I'll quit. So I adhere to that promise, and I
Hmm.
never did lottery again. I went to casinos 3 4 times in my life later on, much later on, but I never
Hmm.
did lottery again, and I don't
Okay.
think I'll do. So two lessons I learned from that lottery thing. One is never ever borrow and invest and trade. I have never done it till
Right.
now. I have never even borrowed from my dad. So that was a huge
Excellent.
lesson, because the embarrassment that you face, the danger to the relationship that you face, that what if you lose trust, what if they find out, and so on. That scare, that sleepless nights, that was like immense for me. For a child, it was like I won't ever forget. So I have never borrowed, and I don't think I'll ever borrow money and invest. It's an easier leverage, but I'll not do it. That's one
Excellent.
lesson. And second lesson I learned was that while I was losing money, they used to give like those pink notebook kind of a thing, in which they used to give older numbers, which number appeared on Thursday, which number appeared in one. So I became so passionate about those numbers, trying to find a pattern there. There was no charts or anything, but I was like trying to find pattern, when the fifth number will come, when the ninth number will come. So I used to do it like for 2 3 hours. So I understood one thing, that I'm going to do this thing. Like I connected the dots much later, but I understood that I'm going to do this thing later in life, because this is what will keep me hooked and I'm passionate about. So this was also a big learning.
Just to ask, what I mean, it was truly random, right? Or was there an analysis in the numbers? Was there a pattern, or were you just trying to find a pattern? Uh, like lottery numbers are random, right? Like there can't be a.
If you want to get into it, like I never spoke about it much later, but if you do like horse races or lottery, these are the games fixed by bigger guys.
Hmm.
Okay,
Hmm, hmm.
lot of hawala also goes into it, and lot of, so definitely these numbers are not random.
Horse races, I agree. I will never believe a horse race is random because I have family that is into horse racing. So
So
I know it is not random. There are two ways of it. I mean,
exactly.
one, there is an actual studying of the horse. There are some people who can just look at the horse and understand at which weight, in what kind of floor, based on which jockey is riding it, how it is going to do. But lottery, I thought, was truly random numbers. Like, I mean, I didn't know this. That I mean, I haven't explored this. I really thought lottery is random. You can't have a science to picking lottery numbers.
Yeah. So I'll give you 2 3 examples about it. Have you been to Mahalakshmi Race Course in Bombay?
No, but I've been to Bangalore race
Na-
course.
yeah. So nowadays they give you all kinds of numbers: the jockey number, the weightage, the ranking, the every shit they give you, right?
Hmm.
So there is a billionaire in Hong Kong. He does only horse racing, and he has found a method to it, and he has made $1 billion plus. On I'll share the link to that to it. So I believe that in any market, okay, if someone is making an outsized return, and there are a lot of guys who are generating an alpha, then it's not definitely not random. Okay,
Hmm.
Absolutely.
and I when we talk about lottery, see what happens is that these are like state-sponsored lotteries, and somebody is actually generating those numbers. Like, and if I know that 11-digit number or 10-digit number in advance, I get to make crores, right, out of public money.
Absolutely.
So those
Absolutely.
numbers are leaked, and those numbers are, see, you can never leak an information to one guy. Okay,
Hmm.
so those
Yeah.
numbers are leaked, and then the other guy leaks to 7 guys, then the other guy leaks to 10 guys, and so on. And so what happens is that you will find a lot of people betting on those numbers, because that information percolates. Information is like water, even concrete can't hold it, right?
Of
Yeah.
So
course.
it percolates. So the number which is heavily bet, number which comes often, there is something to it. I was just a kid, but
Okay.
because I have seen guys getting rich on this. So
Okay.
that's my firm belief, and there's nothing for me to prove about it. But
Absolutely.
there is third example which I'll give you. There's a guy in, I think, California, a mathematician actually. He found a flaw in lottery numbers, and at that point of time, the lottery used to be there on 7-Eleven, and you can buy limited tickets. So he used to travel across state and buy those tickets, and he made like more than $10 million. So there are flaws in every system, and I don't believe that any market is random. That's my firm belief. That's how
Hmm.
we exist in the market.
Yeah, I mean,
So
I have
this was
seen a
my
lot of your tweets, Anand, where you keep talking about quote unquote operator bhaiya. So, since you
yeah.
have this theory that nothing is random and everything has a bop sitting at the top, pulling the strings, so we're gonna talk more about this operator bhaiya ka game plan down the line.
See, in the limited time, we'll just brush up 3-4 examples to it,
Hmm.
and that will give us an idea how the world operates, especially the stock market. If you are aware of Rajat Gupta incident, the Rajat Gupta who was CEO of McKinsey, who was later on convicted in US for 2 years for insider trading, right?
Yeah.
His friend was Raja Ram, or I'm forgetting the name. He's also serving. He was a Sri Lankan. He's also serving a term. So Rajat Gupta was on the board of Goldman, and
Hmm.
Goldman was going to have some non-published sensitive information in the board, which Rajat Gupta came to know, and he informed just before market close. He informed Raja Ram on phone. That's how he was convicted. Okay, and Raja Ram bought like huge amount of call options on Goldman, right?
Okay.
Okay.
So I am sure Raja Ram did not buy it alone. He was convicted because he was the biggest player, right?
Yeah.
But this is like SEC records. I'm telling you. Okay, I mean, if you just go at largest SEC fines in US, I am forgetting the name of the hedge fund, the bald guy who runs it. He paid $1.9 billion, B for Bombay, for
Yeah.
insider trading, right? If someone is
No,
paying
this is
1.9,
known. Like this happens.
yeah,
There's
this happens.
insider trading is a thing.
So
Yeah.
somebody who is a CEO, who he was on the board of ISB, he was like, Rajat Gupta was so celebrated, right? Why does he need that extra buck? Because it is so easy. It's like money free on the table. I mean, if you're willing to ignore the present term, just make a phone call and earn $100 million. Who would not do it, right? Coming to the second example, Reliance Industries, and including the entire Motabhai family, was fined by SEBI. See, in India, SEBI doesn't have punitive powers. Okay,
Right.
it cannot jail you.
Correct.
The
Okay,
SEC does though, so it's
Yes.
and
different. Like for them
it's
it's different.
different.
For us it's different.
Yeah. Plus, there you Southern District is very active in prosecuting these guys. If you know Preet Barara and all that, right? So
Hmm.
this entire Motabhai family, including Motabhai, was fined by SEBI. Reliance Industries was fined by SEBI, and they have contested that claim that is in Supreme Court. And you know how courts in India work. Anything which gets fined by one agency, one top-notch agency, has some merit. So what was the
Right.
case? They were going to offload Reliance Petroleum shares. Reliance Treasury was going to offload Reliance Petroleum shares, right? And then they jacked up the price to insane levels.
Hmm.
They not
Yeah.
only then sold futures equivalent to what they were going to sell. They thought, the price is so jacked up. They bought put options as well. I
Okay.
have written a thread about it. The entire thing is in public domain. So
Oh
अपना
yeah,
मोटा
and I
भैया
believe
और
they, if I'm not wrong, they also, because they didn't want all the transactions through related parties, they also outsourced it
eight
to
firms,
some,
yeah, eight firms,
yeah,
yeah.
different
The
firms to be
cartel of
short.
hotel operator भैया having 8 WhatsApp groups, yeah.
I think the fine also was some 15 crores
five
worth
thousand
of
crore,
fine.
5,000 crore. The entire
5,000
scam,
crores.
SEBI alleges that
Uh-huh.
5,000 crore, and they have decided to, pay a. See, with SEBI, they don't have investigative or punitive powers as big as we would want it to. So they have a clause that you can pay a reasonable fine without accepting or denying the guilt, and you can get away. A lot of
Right.
people have done that.
No,
So
I
yeah,
mean, if you go by that, like, why so? You name the biggest investors in this country or whoever,
I'll
they're
I'll
all
tell you the names,
people.
and you will. Yeah.
Yeah, I mean, they're all
I mean,
people who openly have accepted convictions of insider
Insider
trading and
trading,
paid fines.
yes.
Well, they're very much accept, and it's a thing. Like, it doesn't matter if a market exists. People with power will
yeah.
abuse it. People with access and people at the top, when they can take advantage of something. Most people who say I never take advantage of things is because they're not in a position to. Most people who are placed in a position where they can take advantage of something that they know that somebody else doesn't, they will. That's kind of how it works, if I'm not wrong, at least of what I understand.
Yeah, and people who are insiders, the top management of a company, they have sensitive information which will move the market, especially
Right.
before the result, right? The entire
Yeah.
Sun Pharma family, the promoter family, was fined, right?
Hmm.
Ace investors like Saurabh Mukherjee, he paid 2 crore without accepting the guilt. Then Junjun, he then Samir Arora, the case is still pending, right? So
Yeah.
like in India, our retail fraternity thinks that everything is random, and nobody knows the information beforehand. But when you after before the Ranbaxy Sun Pharma, I think Ranbaxy Daiichi was taken over by Sun Pharma. You see the stock movement, 15 days rally, and then the news comes, and then the profit booking comes. So operator bhaiya always knows.
Hmm.
And nowadays it's so easy to do it, and it's so impossible to prove it. Let's say tomorrow, if me and Praful decide that the day he is having long hanging hairs, right, that is the day I need to buy this particular share. So he'll come on a podcast and his hair is open, so I'll just go buy. And the day he is
Absolutely.
having a ponytail, I'll just go and buy a put, right? So an agency can never prove it, right? After social media, you don't
Yes,
need a
yes.
phone, you don't need anything, right? So that's
I
the
mean, I
story about
guess
our
this
operator
is
bhaiya.
one of the things we have to accept. Like, this will always be there. Now, the question is, you are playing a game where there are better players than you. Will you still come to the market and try to make a career out of it, knowing that you're at a disadvantage? Because something I think we should all understand is, even when we look at institutions as retail traders, you don't have the kind of tech they do. You don't have the kind of research that they do. Forget insider information. You don't have the analytical power or the execution power that so many people have. They've put in so much money. You are at a disadvantage. Can you still come up with a way of surviving that environment is where it really comes down to. Because this will be there in any market, right? Like, we can agree this will be the case in any market.
Yeah, and see, my theory is that it is always helpful to a trader like me and you, and I'll come to that if uh, for that also I'll discuss. First of all, let's say for example, Yes Bank was punished by RBI. They
Yeah.
they put in, I think, 2019 or something, they put RBI nominees in the board.
Hmm.
Yeah.
The stock started
Yeah.
falling much before that, a couple of months back. So you just need to follow the trend, you just need to follow the open interest, you just need to follow the volume, right? For
Yeah.
example, in ITC, as we speak, for last 2 years, institutional holding is decreasing with huge volume. You plot a monthly graph, and you will see that with large volume, institutions are selling, and who is lapping it up? Retail.
Hmm.
Why? What do they
Absolutely.
know that we don't know? We don't know.
Yeah.
We don't, as a trend follower, we don't need to know that information, but we know that somebody is selling. The price will not lie to you,
Yeah.
Yeah.
Just be on the
right?
right side of
So
the
my theory
price.
is, my theory is, if market becomes 100% efficient, like super efficient, it will be very difficult to make an alpha out of it, because
It
everybody will
can't
have the same
exist.
information.
Correct.
Everybody,
Yeah.
it can't
Absolutely.
exist. I mean, look at Corona lockdown, when everything was Janta curfew and all that, and market was like going up and up and up every day. Now, in hindsight, we know that money was being printed like at an insane level, and they doubled the balance sheet from $4 trillion to $8 trillion within a year.
Yeah.
But so there was no rationale, but insiders knew, right? The bigger players knew it. That's why they were buying it. They were driving the market.
Yes.
Absolutely.
So going back to that, when I quit my lottery, then after that I did not do anything related to stock market, and I went to do engineering from Kanpur. And luckily, when I was doing my summer internship, that was in HAL Lucknow. If you know HAL, Hindustan Aeronautics
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 Limited.
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 Yeah.
Yes. Yeah.
Yeah, it is headquartered in Bangalore, incidentally.
Hmm.
Yeah.
And so they have a branch in Lucknow, and there my guide, he used to be like big time in stock market, and he always had this, I think 5paisa.com or some broker site always open. And he said, you are an engineer and you are like from IIT, so you must be knowing everything, data and all that. And I pretended that I knew. I had no idea. And he said, why don't you, as a side project, why don't you find next Infosys for me? And I said, yeah, I'll try. And he said, if you do that, I'll give you an A. So I read Intelligent Investor by Graham, and a lot of Warren Buffett and all that. And I started tracking EPS and all that, trying to look busy. In the process, I learned I was not enjoying that, but he gave me a target, so I was just looking at Infosys. And those were the times when Narayan Murthy had given ESOPs to everyone, including his driver. So driver had become crorepati, and it was there on Times of India front page at the bottom that Narayan Murthy's driver becomes crorepati.
Hmm.
So and in 1999, he or 2000, he and me both, we thought that Infosys is so overpriced, and we need to find new Infosys. Now 20 years later, I realized that next Infosys is Infosys only. Next HDFC Bank is HDFC Bank only, because these companies are growing not by accident.
Yes.
They are going to capture the entire thing. So I tried, and finally I suggested him 5 companies in IT space, because everybody was investing in IT. This is before near the .com bubble. So everybody was investing in IT and all that. So I gave him 5 company names, and I again incidentally I got involved in stock market, and I was not enjoying the fundamental part of it, but I was looking at the prices and everything, and I was enjoying it. So then he gave me an A. And but I had decided I'll never borrow money from everyone, and I didn't have any money and so on. So the thing died there. Then I much later I did my MBA. So I did a course in 3 courses actually in derivatives and related financial engineering and all on my electives, because by the time I had decided that something I have to do related to stock market which will make me rich quick. So this was always in my mind. Do something
Right.
which will make you rich quick. So then I was in my campus placement. Incidentally, I was hired by this financial firm where I still work. I have completed 15 years now.
In the same firm.
And in the same firm.
Oh, nice.
And but I didn't have much idea about what these firms do, so I was hired on the sales side of the firm, and talking to the client and what is the client's requirement, taking it down, trying to make the client trade and so on. And then when I joined the firm after 2-3 months, I realized that I'm not in a trading profile. And the second thing was because of these insider trading norms and disclosures required, because I was facing the clients, I had the sensitive information. I was not allowed to trade in equities. Okay.
In your personal capacity.
In my personal capacity, and I was like new, and I didn't want to do it in somebody else's account, and I wanted to be like good boy, following the law and all that. But I wanted to become like rich quick. Then somebody suggested to me, why don't you trade in gold? And again, this was like 2007-8 kind of a era, where the great financial crisis kind of era, 15 years back. And then every commodity was in the bull run or the mad run. So
Right.
I opened my first account, commodity account with India Infoline, and I started trading on phone while doing my job. And incidentally, I had these Reuters and other setups because of my office. So I was looking at the charts, and I was very keen about how the next move will happen and all. And I was visiting a lot of forums, traderg.com and forexfactory.com and so on. There I came to know about this turtle trading rules, which works beautiful in commodities. Anybody who's listening to your podcast, I just want to give a disclaimer that it doesn't work in equities or equity index. So a lot of people do DM, because I've mentioned it many times. So a lot of people do DM, equity ka, what is the back test, or it works, it doesn't work. Dennis Richard, who had started this, has said that it will not work on equity because it's mean reverting essentially, right? Equities and commodities are largely more trending. That's also very interesting thing. why equity won't trend beyond a point and why commodity will trend. I'll just take 2 minutes and I'll explain it to you. The thing is, let's say there is a pipeline burst in Libya. Okay, crude oil pipeline burst in Libya, or there is some unrest in Libya. The dictatorship goes away. These incidents have happened. Gaddafi goes away, and so on. So the demand for commodity is inelastic. Whatever country like India is consuming today, even tomorrow or day after tomorrow, the quantity is going to be same. You will have same fuel in your scooter. The urea plant will run the same energy, right? So the demand is inelastic. Be it $100 per barrel, $200 per barrel, or maybe $300 per barrel. Nobody is going to stop running the automobile or stop running the power plants because it has become expensive, because the demand is completely inelastic. Okay,
Right.
supply cannot be ramped up overnight. I mean, it's a little trickier for crude oil because Saudi Arabia acts as a central bank for crude oil, but there is an OPEC and things like that. So you can't ramp up the supply just tomorrow. You can print more money tomorrow, right?
Yeah.
But you can't open a new pipeline tomorrow, right?
The
There is
infrastructure is fixed. It's not going to come out.
yeah,
of
even the political unrest, when it starts rolling up, you can't stop it. It becomes a social unrest. Like, it's beyond you and me or any operator, bhaiya, right?
Yeah.
So beautiful trends emerge because everybody is buying for their future needs, and there is no supply. That extra 2 billion, the extra 2 million barrel per day or whatever, it won't come, and even at a higher price. So people will start buying. Same happens for many other commodities like agri commodities, right? For example, I trade in agri, and let's say this year, chana fasal, it just becomes bad. There is some kida or some insect which bites most of the. We will not stop consuming chana or dal, right? We will.
Correct.
Or there was a huge trend in kali mirch, pepper. Now NCDX has banned that contract because of some scam. But if you are consuming like half a teaspoon of pepper every day, even if it goes 20 times the price, you'll still consume half a teaspoon every day, right?
Exactly.
The demand is inelastic. That makes beautiful trends in commodities. Let's talk about equities. Let's say there was a whistleblower incident in Infosys, and it fell 16% in a day. Now there are institutions which are praying every day. There is retail which is praying every day. Let this stock fall and I'll buy it.
Correct.
Right?
Yeah.
At a lower price, somebody will buy it. It doesn't take much money. It doesn't take much effort. Just a click of a mouse and they can buy it. Similarly, let's say tomorrow Infosys goes 10 times from here. I bet even Naran Murthy will sell at a price everybody. So at every price level, there will be some selling which will come. People will have different needs. It will never be inelastic, right? That's the major difference between. So that's the book also talks about the same concept which I'm telling you, that commodities will have beautiful trends. So I was not allowed to trade in equities, so I started trading in commodities, and a lot of people doubted it. I mean, I was on a trading firm, so I spoke to my head of trading, and he said, if it was so easy to make money in the markets, everybody would have been billionaire, right? So don't fuck your career up and focus on your work. I spoke to one of my batchmate who was in HSBC London, and he said the same thing, that this doesn't work. Somebody did a back test from 1990 to 2000, it doesn't work. 2000 to 2005, it doesn't work. And everybody, I just took a leap of faith, because I assumed that the Indian commodity market was nascent, just like US was in 70s and 80s. And the more nascent the market, more inefficient it is. More driven by operators, more driven by such swings which come frequently. And I just took a leap of faith, and it worked out pretty well for me. I involved my wife as well on that. And because commodities are open till 11:30, 12 o'clock in the night, and I was doing my job as well, so she was executing the trades, and I had phone support from India Infoline. Like it used to start at 10 o'clock in the morning, and it used to go on till 12 o'clock in the night. And turtle trading rules you have to trade multiple commodities at the same time. Otherwise, because trends are very rare, so the idea is you will get one or two trends every time, so that your equity curve is normalized. You don't have deeper drawdowns. Still, I used to have like 20-30% drawdown every year, and it was like really painful. I used to cry, but I used to stick to the rules. I didn't watch any news or anything, just those rules, little modification on those rules, and 20 to 30% drawdown every year. But I used to make like 100% return every year. That is what I did for 5 years. Okay, then I started branching out, and then I started trading equity, both cash and FNO. and slowly I started learning. Those were the times there was no Twitter, and people like rant a lot that there's so much of misinformation, so many of wrong videos. This guy made a wrong video, that guy made a wrong video. I would say 10 years back, just show me any video, yeah. How the
Yeah.
Zerodha was not there, by the way. There was no charting
Complete
available.
void of
Yeah.
Exactly.
information. Yeah. Yeah.
And so no support, nothing. I mean, I'll tell you one incident. Okay, in agri commodities there is something called tender period.
Okay.
Nowadays, so in physical settlement, you would know, right? So if you have to settle a agri commodity physically, so you have to supply those many quintals or kgs of
Quintals. Yes.
To the warehouse,
yeah,
right?
to the
Correct. Yeah.
warehouse, and there are designated warehouse. So earlier, NCDX used to give 11 days for you because shipment will take time, right?
Okay.
So the expiry is on 19th, and the contract used to be in tender period on 5th itself. I didn't know because there was nobody to tell me, nobody to guide me, nobody to tweet about it. So on the last day, I got a call from broker, sir, you have so many positions in barley. You want me to square it off, or are you really going to buy those many quintals of barley? Then you put up extra margin. Because if so, then I said, what if I don't square it off? He said, sir, you'll have to go to the warehouse and you'll have to take the delivery, otherwise there is heavy penalty. I didn't know that till the last day, till the last hour. And a lot of brokers won't call you, right? They'll just
Yeah.
debit the penalty, and all my profits of many years would have gone by this incident only.
Okay.
Because
How
I
did you
was not going
mitigate
to
that?
warehouse barley, right?
No. How did you mitigate this?
So I'm really thankful. Sorry,
How did you mitigate this?
I mean, I
Square
was
it off.
extremely lucky. I mean, the broker called me, and then I came to know, and he said, "Sir, please start reading the contract specification note. It's very important for commodities, and I don't want you to get caught." I'm still using Arctic Global, and wonderful broker charges 9 rupees per order. Okay, and gives excellent support. Never went down. But I mean, you can edit it out of, because I don't want to take any broker's name. But I'm just telling you that a lot of brokers taught me, how things are done. And a lot of things, the stupidity also I learned from brokers only. One day I was selling, I think, Jeera, and I was like selling, and just before close, my terminal was, I was not in front of the terminal. I called their line, and he said, "Sir, itna to gir gaya. Why are you selling it now?" It was like near the lower circuit.
Okay.
Then I realized, when it falls, people are generally buying. So I knew that not many smart people are there in the market. So I sold even more, whatever I was thinking to sell the next day. So these are the things. Then I came into equity and FNO and all that, and then then it became a regular affair.
So how's the liquidity in the agri market?
See, in both agri and non-agri market, before 2012, there used to be decent liquidity. In 2012, government introduced something called commodity transaction tax on the line of STT.
Yes.
So there used to be a lot of jobbing, that you will hold a position for 10 seconds, 15 seconds, right? Not more than a minute. A lot of people used to do that, and that is called jobbing. There were a lot of jobbing firms. They lost their Mojo or the Alpha immediately, because once you have a tax in between the buying and selling, just to break even, you need a
Positive outcome.
yeah. So then liquidity dried up, and then institutions are not allowed there, banks are not allowed, FIIs are not allowed. So liquidity is really poor. But I mean, I'll not get too much into liquidity because there is some alpha to it as well. But there are times when you have liquidity in different commodities. For example, if you're trading crude oil, so around 5:30, 6 o'clock in the evening, the liquidity really goes up. Around 9:30 again, liquidity is very high. And my position, and nowadays contract sizes are like so big. For example, nickel one contract is 20 lakh rupees.
Oh.
Yeah. So you, as a retail guy, until you have like 15-20 crore rupees total, you don't need to worry too much about liquidity, because you'll be trading like 2-3 contracts, 5 contracts of a particular commodity, right? You'll be diversified. There was a couple of scams, if you know that Jignesh Mehta scam, that MCX scam, and National Spot Exchange scam that happened.
No.
After that, government merged. It used to be. It used to have a different regulator, Forward Market Commission, and that was not a quasi-judicial body. So they merged it with SEBI, and when SEBI came, unfortunately or fortunately, a lot of new changes came. They removed crude mini contract. They removed all the mini contracts, copper mini. So a lot of retail participation went away, and retail
Idea
guys
is to
play.
reduce the speculative activity and keep it purely for a hedging and transactional
They
purpose,
they,
right?
they wanted smaller player not to dabble into commodities, because as everybody says and loves to say that 99% of the people lose money. So how do you remove smaller players? By making it so big, the contract size so big that a guy
They
having
can't even
50,000,
afford to
60,000
trade.
can't even trade.
Yeah.
I mean, earlier we
Everywhere.
used to have Nifty Mini as well. I don't know whether you guys know it or not. Nifty Mini.
Have you
No.
heard
It
of it,
used to have a
Shreyas?
lot size of
I
25.
haven't.
Very
Okay.
interesting. I mean,
Okay.
it used to have a lot size of 25,
Okay.
and Nifty Main used to have a contract size of 75.
Hmm.
Yeah.
A pretty cool product, yeah. I mean, Mini. Imagine, na, if you have lesser capital, you can do that, right? I don't
On
know why
one
they will
hand,
remove it.
it's on one hand the exchange is like, how can we get more participation, more people coming in, more activity, more transactions, and on the other hand, you have the regulator which is like, no,
Regulator who's
I
trying to
need
curb the
to.
same thing. Yeah.
Yeah, like no they don't want much speculation. We want it to be this thing. But superb. So you started off purely in commodities because that's the only market you were allowed to trade. You wanted to trade some market, and the only one that you
Yeah.
were allowed to trade is this. Otherwise, you would have done equities to start off, probably.
Just like everybody else, I would have started with equity cash, because that is
Yeah.
what people generally do in their personal portfolios. I did a lot of IPO stuff as well. It didn't work out
Okay.
so well for me, and so I quit doing it at that point of time. I was allowed to do IPOs. For
Okay.
IPOs also, once my compliance asked me what are you doing and all, but I used to do like a lot of IPOs.
Hmm.
So
Okay.
there I quit that as well. I didn't have very good experience with IPO. But commodities, I had good experience. Still, my wife runs a very decent size account of commodities. She takes care of commodities now, and I'm totally into FNO and yeah.
Excellent. So how did you transition? Like you were in sales initially, and from
Yeah.
there to the trading desk, what was that like?
So the thing is, unlike what you guys might think, I'm a very introvert kind of a guy.
Oh,
Okay.
In person
seriously?
interaction, especially if it is a forced interaction, so I feel very uncomfortable.
Okay.
Okay.
And sales is all about forced interaction, right? You have to entertain clients, and
Kind
you have
of,
to
yeah.
meet clients, and you have to
Yeah.
pester them. Sir, you do this particular deal with me only, don't do it it's like you have two brokers, one ICICI and one is India Infoline. So every guy has to call you once in a while, right? Sir, why don't you trade with me? And you're like, ha kar lenge yaar. Don't bug me, I'm busy right now, call me
Yeah.
later. So
Yeah.
these things I used to take very personally, and used to hurt my ego like anything.
Okay.
So within
Yeah.
my first year itself, I decided I am not going to do this job. And I knew that
Okay.
switching to trading was not easy. I tried applying. I gave my resume to my friends and all. I was not getting a trading related job.
Hmm.
And I got married, and I told my wife that although my job sounds very fancy, but I'm not going to continue it. And mera dam gutta hai. So she said that why don't you quit it now, and we'll go to a village, and we'll have some income. Before that, I was teaching mathematics also in a coaching institute, so I had a decent second cash flow.
Okay.
So yeah, so for ITJ students, so I had a decent second cash flow. She said, we'll go to a smaller town and we'll settle there. We don't need a flashy lifestyle and all that. And so I said okay, but I never had the guts to leave my job. Okay. And so I started thinking about that's how the intense desire to become rich and to do more and more trading also developed. I never bought any gold or any property. Everything is in equities or in my trading account, as on today as well.
Hmm.
So then
Oh,
I
you
didn't
never
get any.
diversified into real estate, any of that?
No,
It
nothing.
wasn't.
No,
Yeah. Okay.
no, no diamond, no gold, nothing. Like
Excellent.
all it's a trading firm. My household. So then but I met a friend who quit his job because of medical condition, and he became a very good trader. He is doing nifty monthly option selling, generating
Okay.
around 30-35% like for last 10-15 years.
Okay.
And so he said, don't quit your job. It's not so easy to become a successful trader, and if once you quit your job and you have nothing else to bank upon, it becomes doubly hard. So don't quit your job. And this was so he said, why don't you do trading in the evening? And he also said, do it in commodities or do whatever, but don't quit your job.
Hmm.
And he said, if you really excel in your job, that is the only benchmark or only indicator that you are not running away from your job, but you want a career switch. Because a lot of people come to trading, they want to run away from their life, they want to run away from debt, they want to prove it to somebody else, they want to show it to their parents. They don't love trading, and unless you love trading, you won't survive for decades and years.
Very
Right?
true. Very true.
That's what he said. So I took
Absolutely.
it to heart, and I started like doing those things which I hated. And for 4 years in a row, or maybe 5 years in a row, I was like top performer in my vertical in sales. Not an easy
Okay.
Excellent.
task. Okay.
Yeah.
And I used to cry to bed like every night because I didn't like it. But I used to do like a the way Praful does, like 80 to 90 minutes of whatever, right?
Oh, I love
So
it.
I used to.
I look forward to it on a daily basis.
Sorry for the wrong example.
No issues. No issues. No issues.
So
No, I think invariably what ends up happening is, if you know you want to keep it in your life forever, even if you don't love it, you convince yourself you love it.
Probably.
no,
Probably.
yeah, but coming to Prabhul bhai, what I heard that gym becomes very addictive at a hormonal level as well. You
Yes.
crave for it, and if
Yes.
you don't go for 2 days, you will feel down. So it's a different thing. But in sales job, you will hate it every day because who loves calling a random stranger and pestering him or something, right?
Yes.
So,
Yeah.
but I was doing it very in a disciplined way, just to check on myself that I have to prove myself. And I did a lot of stuff on personal financing. I keep tweeting about it as well. So I was saving very aggressively, and I was creating a large corpus so that I can retire early and I can get out of this job cycle. So one day came, and like after 10 years 9 years of job, and I had like decent saving to retire. And so I called my country head and I said, I want to quit. And my son was a 1 year old. So he said, using a Hindi explicit, that so and so, if you don't want to think about yourself, why don't you think about your son? Like, it's a long
Ah.
life.
Okay.
Think about his needs. Why do you want to retire? I said,
Anand
"No, I
bhai,
have
just
made
to
up
go on
my-"
a tangent here, I have this theory. Okay, you tell me like if it's valid or not. I believe that people who are good at sales, they're also good at trading, because you need to keep your ego aside to be a good salesman, right? Because you take like 100, 150 no's every day. It's like almost taking like 100, 150 stop losses every day. So you stop, you start keeping your ego aside. And is it true? Is my theory valid?
Uh, I'll give you a different perspective, Praful bhai. The thing is, what I have observed, that if you are a top performer in your field, be it a doctor or an engineer or a sales guy, and at that point of time in life, see, we all go through phases. If at that point of time in life, if you are open to new ideas, then you learn trading very quickly and you'll excel in it. Because being a top performer in any field requires immense amount of discipline, things which you hate to do. For example, writing a trading journal, or for example, you guys are like publishing a YouTube live, right? It's, I know I have done 102 videos, so I can tell you it's like immense amount of discipline. So that discipline starts from day one in trading itself. What to do is available on internet, right?
True.
Keep your losses short and let your profits run. But having that emotional discipline, right?
True.
So that is the thing which percolates and which gets translated into trading acumen.
I mean, to put it
So-
simply, if you're at the top in any field and you switch field, you're quite likely to at least have a possibility to get at the top, because you
Better
clearly put in the
possibilities, yeah.
effort,
Yeah.
right? Like you're that kind of a person. Like a winner will always try to be a winner at everything, like that kind of approach. But absolutely. Anand sir, you were telling us about your boss before.
Yeah, so
Oh,
he
sorry,
said,
I cut you off.
No, it's okay.
No, it's okay. So he said, why don't you think about your son? And it's a terrible decision. And I had a lot of ESOPs which I was going to lose because of my resignation and all. So he said, what do you want to do? And I said, probably I'll do trading. So sensing that I wanted to become a trader and all, he offered me a trading profile, and that was a like win-win deal. because I always wanted to be a trader. So point I'm trying to highlight here is that a lot of people ask me how to become an institutional trader or how to get into a trading firm or how to start your career in it's not so easy. Jobs are far and few. That's one. It took me 9 years of struggle to become a trader. Most of the
Wow.
traders who are working in my firm, they are experienced from PSUs. For example, the star trader that we have, he was from Punjab National Bank. He was trader for 20 years in Punjab National Bank. So all these market makers, they have expertise in their field. They have been trained by PSUs. They were very good at it, or they have been directly hired from IIT and IIM, probably randomly. It's like they go to the campus, hire one or two guys. Whether you will fit into that or not, very difficult.
Okay.
So then I got a break, and then I'm continuing. This is my 6th year as a professional trader. I'm market maker for NDF volatility and NDF forwards. If you know non-deliverable forwards,
Okay. So
in
you guys like
INR.
you basically make a negative book and then you manage that, is it? Is that the idea? Are you on the
No,
supply side to clients
we,
or
we, we are we are market maker for the clients. That's one thing. So
yeah?
whatever client will demand, we'll try to source it from the market, and
Okay.
we'll give it to the client. And we also run a book based on our view.
Okay. But
That's
market making is basically so for people who are not too well aware of this, you as an institution will accept orders for your clients and you'll basically take the other side. Suppose somebody wants to buy 1 lakh shares of a company, you'll be selling it to them, and then later you have to figure out how to actually buy those 1 lakh shares from the market, and you get a commission for doing this, which varies depending on what client, but it's somewhere around 1 to 2% if I'm not too off. Anand, is that right? Is that about right?
yeah. The broad definition is right. See, what happens is that, for example, when you trade on an exchange, so exchange follows a order matching system. So
Right.
Shreyas sends a order that you want to buy 50,000 quantity of Nifty future, and let's say Praful wants to sell on a different broker. Okay, so both the orders will go electronically, and it will be matched, and a unique trade ID will be generated, and it will be given to both. So that's called order matching system. In a lot of markets like currencies, it's shout and cry market. It's called OTC, over the
Over
counter
the
market.
counter, yeah.
So you come to the counter and a market maker is sitting. So he'll ask you, what do you want to do? You'll say, okay, I want to buy dollar rupee $10 million, right? So I'll give you a price. I make the price.
Right.
Okay.
I don't know. I know what was the last traded price. I know what is the probable price which is trading in the market, but there is no, ready price. I make the price. That's why they are called market maker. So I'll make you the price. You can hit me. So let's say you buy $10 million. Now I have a sold position of $10 million. If I have a view that it's going to go down from here, I can. RBI allows you to hold a position.
Okay.
For example, a bank might be allowed to hold a $100 million aggregate position across dealers. Intraday, the limit might be much higher. So I might hold the position, or I might offload it immediately,
Right.
depending on the view. Right? That's one way. If you are trading in derivatives, for example, I'm
Anand bhai, how do you offload it? You have a negative.
Actual mark.
So just to make it clear, right now I'm not doing that. I'm just trying to explain that concept. I am trading a different product.
Okay.
I am trading volatility and non-deliverable
Non-deliverable
forwards.
forwards,
Yeah, I'll come to that in a second. But I'm just telling you how this happens. Let's say you're a client and you sold me $10 million. Okay, unless it's a very very big amount.
Okay.
$10 million is a very small amount for a market maker. So invariably he will wait for you have bought, so he'll wait for a seller.
Okay.
Okay, and he'll hold that position. Okay, if market is moving very very fast, so there are brokers like phone brokers who are sitting like 20 brokers, 25 brokers. So he will call that broker and he'll say, I want to sell 100 ASAP. So that broker will shout in his office that XYZ firm sells. Again, it's a shout and cry. तो उसका जो दूसरा friend होगा broker का, he's dealing with ABC firm.
Okay.
Then he'll say ABC buys or give me a better price. So still it happens mostly on phone, the currency market in India. Okay. But I'm not doing that. What I'm doing is there is something called non-deliverable forward market as well. So what happens is that rupee being a controlled currency, it's not a free floating currency. So you can't trade it outside India.
Correct.
but people trade it illegally in Singapore, Dubai, and London. So there is a very very big market. In fact, there was a Deutsche Bank report as well, which says that 70% of the rupee market is abroad, and especially in London. Okay.
Mm-hmm.
So what happens is those are single day forwards. It can be of any day. Okay, and those are settled at RBIB rate. There is something called RBIB rate which comes around 12:45.
Every
RBI
day,
publishes the
yes,
rate.
yeah.
So that forward gets settled at that.
Mm-hmm.
So then that creates a lot of different kind of players and interests and speculators. A lot of people will buy in India and sell in Singapore because there will always be difference. This being a regulated, if not everybody can do a buy sell in Singapore. FIIs can't do it in India in a big way. They're not allowed. They need an underline and stuff like that. I mean, it gets too technical. But I'm saying in Singapore, with a click of a mouse, you can do 10 billion as well. You just need a backup. Right. So that creates a lot of arbitrage. So comes the arbitrage player, then comes the market maker, then comes the real hedger, somebody who is thinking of setting up of a steel plant in India, for example, like POSCO, right? Thinking. So they have a possible rupee exposure in next 2 years. Now I want to hedge it through forwards. I want my certainty in my cash flow. All those kinds of things happen. So then this being a OTC product, then you need a market maker for each product. Right. So I am handling, the NDA forward part. That's what
Excellent.
is my day job. Yeah.
So really, you went from a point wherein you were doing sales, and then you were trading on the side, and you said, "You know what? I'm not going to do
He was
sales
teaching
anymore. I'm
maths
going
to
do
kids.
trading." Yeah, you're teaching math to kids, and then you're like, "Sorry, boss, I'm not going to do this. I don't like it." It's like, "What do you like? I'll trade." And he's like, "Come trade for me."
Yeah.
Excellent.
Yeah, and
Superb.
so
Yeah.
that's how I started. And on the I started then trading my FNO on the side, usually in other relatives' accounts, wife's account. It started growing, and that book has also become sufficiently large. So that's what, because my market becomes more active when London opens, which is around 1:32 o'clock. Until the time Indian market, the NSE wala market kahani is over almost.
Okay.
At least for me, the trends have been established, and
So I have
So
a
I'll-
question here, and I think you'd be the most qualified person for this. Now, I think most people, most traders, I mean, they invariably like trade in one market, and they sort of get used to its functioning, and they stick to that. So it's okay, either you're trading forex, you're trading commodities, or you're trading equities. But you, as someone who is trading, who has the experience of having traded across different markets and in different instruments, in different segments altogether, do you feel that invariably you have a preference towards one particular market, or is volatility across the same to you? You search for volatility wherever it is, or where do you stand on this? Like, what do you find you are most comfortable with, or as far as performance metrics are concerned, where do you think you do better in a particular? Is there something like that, or is any market a market to you? It doesn't matter what market it is.
Okay, that's a very interesting question actually. So one of the guys whom I idolize and I hope that I'll become like him someday is Paul Tudor Jones. Okay, and second guy obviously Richard Dennis, who invented turtle trading rules. And both of them in a way have been trend followers. And so I think Paul Tudor Jones said in Market Wizard, the book, you must have read it, right?
Yep.
That give me any market and just remove the label, whether it is soybean or whether it is copper. Just give me any market. If it is moving, I'll trade. Because ultimately market, the candlestick is about human psychology.
Yeah.
Right. So broadly, there is no difference. People say, how do you trade commodities? How it is different? It's not different. You sell what is looking weaker and you buy what is, I mean, at least technical side. I mean, I have never been to a fundamental side of it. What is the supply or what is the EP by E ratio and stuff like that. When there is panic in the market, you sell. If Infi is falling 20% in a day, the whistleblower thing, you sell. That's how you do, right? You will
This
be
is the
wrong.
trader's mindset. It's the hardcore trader's mindset.
Yeah.
I mean, wherein you're not too concerned about what's going to happen. You're just looking at one time frame, and that time frame is telling you this, and that's what you're sticking to.
I mean,
Excellent.
we don't
Having
worry
said
about
that,
the cause, right? We just like trade the effect. Whatever the effect that is showing on the price, we trade it.
Yeah, exactly. And anything which is in strong trend, you will just get to look at the price and the volume, and you'll know that for example, Nifty was making like 5-7 green candles in a row, right?
Hmm.
So it's a
Yeah.
strong trend, right?
Yeah.
So anything that moves. Having said that, and having been in the market for 15 years, I can tell you, my last year was like most challenging. I made around 20% only total,
Mm-hmm.
Okay.
and because you know, m- and this year I can tell you, last 6 months or maybe more than that, last 8-9 months, trading bank Nifty is like one of the toughest.
Yeah.
Yeah.
I know a lot of your subscribers would be bank Nifty traders, so I will just tell them, if it is not working out for you, look at Nifty as well. Look at other ways of making money, because bank Nifty, it's like one of the most heaviest traded instrument in Asia, not India, Asia, and
Hmm.
every kind of a trader is trying to find an alpha. There are stop losses everywhere. Somewhere 920 stop loss is there. Somebody's trade starts when 920 stop loss is hit, and so on. So it's like becoming so challenging. I have never seen a market so difficult. Having said that, I do trade bank Nifty, but it's one market which is like more difficult than other markets.
Which is your favorite? Do you have a favorite market or a favorite instrument, or do you just don't subscribe to that school of thought? You will trade anything that
If you
moves.
if you tell me like a beautiful market, or a market which behaves according to
Textbook.
what yeah,
Textbook
is
basically.
Nifty.
Textbook patterns.
Nifty
Yeah.
is a
Okay.
pretty good market, yeah. Nifty, and I like commodities a lot, because it's easier to find trend in them. But nowadays, even commodity market, the participation has become so low, and
Mhm.
more operators are there, random operators basically.
Okay.
So in some of the market, for example, I tweeted one day that it opens at 9 o'clock, until 10:30 there was not a single contract traded. Yesterday there
Okay.
was so many contracts, and then next, how can it be possible, like in a free market, right?
Yeah.
Yeah.
So that's why I'm not saying commodities, because I don't want everybody to just to jump on commodities, whoever is listening. But Nifty is definitely more beautiful, more predictable as to what you can do. Both
Anand
for
bhai, you have been trading for last 15 years, right? So you have seen the different phases of market. So what's the biggest change that you have seen post COVID? Because again, as you mentioned, Bank Nifty has been the toughest instrument to trade the last year, right? So what do you think is the what has changed according to you?
see two things have changed definitely. One is that after this leverage was removed,
Mm-hmm.
then something has changed. The spikes are more. I mean, this is my personal view. I might be completely wrong, so take it with a pinch of salt. But
Mm-hmm.
definitely something has changed, and it's not easy. And before COVID, or before earlier, before weekly was introduced, it was so easy. Just keep on selling options, and keep collecting theta. This kind of firefighting was rare. It used to come once in 3-4 months, and you won't
Right.
believe, but this is how it was. And weeklies definitely changed the game a lot. Weekly options, and then this margin rule, which was changed, this sebika for September. So I think that has changed the fundamental nature of the market, especially bank Nifty.
So has
Yeah,
the
go on,
change for the good or for the bad?
see those who are see, any market somebody will make money. So those who are making money, definitely it's a good thing. Okay, so being an
All
old
depends on
hand,
advantage.
and not and still as I said, last year I was struggling, and this year also, especially on bank Nifty, it's not been easy. So I can tell you that older guys might be finding it a little difficult.
Anand, I have
I mean,
a
you
question here, and I want to go a little bit into this. What advantages do you see? So you're an institutional trader, and when it comes to like technology, when it comes to data analysis, what advantages do you think that because retail people be like, okay, these institutional fellows must have everything
Hmm.
with them. Where do you think the differentiation really lies? Like, obviously, the way an institutional trader, I mean, the whole psychology of it would be different because they have that discipline, and they look at this as a job and a business. But where do you see that differentiation? Like, what you would have seen so many retail traders on Twitter. Um, how would you compare the two?
see, I'll tell you one thing, that first of all, the market which I am trading is not a mass market. It's a very niche market, right? NDF market, right?
Yeah.
But I have interacted with a lot of FNO traders also who are trading at institutional level.
Mm-hmm.
They definitely have much better execution. That is one. That is a one very big advantage, because a large part of the alpha comes with execution as well. Okay,
Yeah.
and they have like literally the kind of charges, low charges, which we can't imagine.
Hmm.
Okay, that is second. A lot of them do arbitrage kind of trades, so the overall risk that they take on the book is very less for any
Yeah.
institution.
Yeah.
A retail guy on an average takes much higher risk, and that's why he blows up. Even a good trader, so they take very little risk, and most of their positions are hedged. And one more point I want to tell you, and the biggest point is, for a retail guy, you are the trader, you are the mid office, you are the back office, and you are the risk guy. In an institutional, these lines are like drawn on concrete.
Hmm.
You violate it once, you will get heavy punishment. You violate it twice or thrice, you will be thrown out of your job.
Yeah.
For example, if I trade, there is a daily limit. I mean, for an institution, the money is free, right?
Yeah.
Literally at 0% you can borrow anything. I'm just giving a crude example, right?
Hmm.
But how much position you can take on an half hourly basis, that is monitored by a third department. You can't go overboard. A retail guy, I mean, so many guys I see on Twitter getting a margin call
Hmm.
because either they're trading or they're looking at their funds, and
Yeah.
maxing out on the margin itself is like you are taking the max risk, right? An
Right.
institution will never take a max risk, and there is a third guy who's monitoring it. But then there is a compliance, then there is a back office who will do tally. So a trader has a very, it's like a ship ka captain, right? There is a mechanic, there is an engineer, there is an engine room, there is a boiler room. Captain takes decision, but there is so much of support available, so much of checks and balances available, that this fails, then what will they'll do. Retail guys doesn't have that freedom. That's a
Yeah.
big difference. Having someone else to monitor you, to look at your trade, to reprimand you, to have the fear in the mind that, if I do wrong, 10 people will observe it.
Yeah.
Not Twitter observe it, but real time observe it, right?
Yeah.
That's a big thing which saves you from taking foolish risk.
Correct. Yeah.
Absolutely. I mean, I know this is true for me, but ever since I started documenting my trades and putting up video logs, I feel like there is that automatic this thing that if I do something stupid, I'll have to tell the whole world I did something
Yeah.
stupid.
Yeah,
It's
it's like
even more
you have
reason.
you have created a not exactly the same word, but you have created kind of a blockchain of your risk, right? Everybody can come and comment on it that you did this stupid and all.
Yeah.
So that creates a lot of fear in your mind that, boss, I have to. So you have outsourced your risk
Absolutely.
to the
Yeah.
wider audience. Yeah. So
So true.
the risk management is having this risk management to a third party is very important.
Hmm.
Okay. Yeah.
And
I mean,
but
I
a
guess for
reta-
most people that can be their family, right? Like for example, I think it's good to let your, if you're living with your mom and dad, or let them know, or if you're married, and then you can let your wife know, and it depends. Like, have somebody who's always keeping tabs on you, because when we look back at our own performance, we're never truly completely honest with each other.
Yeah.
We'll be like, we'll make excuses for
We
it, but if
rationalize.
somebody else, yeah,
We
if
rationalize.
somebody else is watching, it makes a huge, I think that's a big input. That, having those checks and balances, knowing that somebody is watching from behind, is always going to make you behave more disciplined and better way.
I totally agree, and I'll take you back to that lottery wala example. I try to hide it from everybody, and I just kept on going in the hole more and more and more and more.
Yeah.
Right? So people, I do a lot of Twitter Q&A, and people who are making heavy losses. One thing is common, that they are not telling about their losses to anyone, to their
Correct.
wife, to their parents, and all that. So some kind of accountability, if you can create to telling your wife or parents or husbands or daughter or son, that will stop you from doing wrong things, which you also know that it is wrong, but you're not able to help yourself.
And once we start going down that path, it at one point it stops being about the money and it starts being about your self-image preservation, your ego preservation, and everything starts creeping into your mind, and you start even going down into that deep into that rabbit hole.
Yeah. So telling, I mean, you should not tell to a casual stranger, but definitely tell to people whom you care about, or whose opinion deeply you care about, your
Yeah.
mom or your whoever, that I am making this loss. In absolute terms, not in percentage terms, that I lost this much or I gained this much overall cumulative and so on. Even if they don't understand any about the market, it's not about them understanding. It's about you disclosing.
Yeah.
Very important. One big advantage a retail guy has, which institutions don't have, which is like a beautiful advantage, and why so many guys are making money at a retail level. See, the thing is, lot of institutional strategies or what institutions do require so much of volume, it will not work in a market like Bank Nifty or intraday. I mean, they can't do 920 straddle, right?
Yeah.
Right. You and me can do it,
Institutions
right?
start 920 standard.
Imagine, right? So it will be a huge spike at 920, right? They can't do it because of the size. It's they're so heavy, they can't move so fast, and they can't be so agile. You and me can be. That's a big advantage. Second is, for most institutions, they have to trade every day, every week, every month, because either they are making market or they are being answerable to a wider institution, wider audience, or their shareholders and all, right?
Yep.
You and me can take a break.
Yes.
You and me can reduce the size, right? So that flexibility which comes, you don't have anyone else to answer to. If market is pretty bad, this is a bad month, you can close your book for some time. You can reduce the size, right? That's a big advantage. So these are the two things. Find a strategy which works, which you know that you will work, which will work for your size. Stick to it and use the flexibility part. That is not there with institution, and that makes good retail traders profitable over 10 years, 15 years, 20 years.
Yeah. Where do you see yourself in another 5 years, 10 years from now? And do you feel like you'll be following the same models and doing the same thing as you're doing now, working for an institution and also trading on the side as well? What is the goal here?
See, I'll tell you, as I was telling you in the beginning, that when I started trading commodities, I was having a drawdown of 20 to 30% every year. And this drawdown is not from the peak. This drawdown is from the base capital. So if on a 1st of April, if I start with whatever amount, let's say 1 crore, so I'll have a drawdown of 20, 30 lakh rupees, right?
Okay.
And then I will recover it. And because that is how the trend following works. It will have a deeper drawdown and it will have a better alpha as well. I used to cover it, and very funny, but I'll tell you how I used to operate. I never thought any return beyond 100% is like reasonable. Like then your luck starts playing a role. So at 100%, I used to close the book for the year. So sometimes I close the book in December itself, right?
Okay.
So this is before I came on Twitter, and then I realized that people are making 300%, 400%, 500%, right? And I'm talking about legit traders, like people. So, but as the capital grew, I started realizing that the same percentage drawdown, it hurts more. It makes you more sleepless. It makes you more disturbed. Okay.
Absolutely.
So a drawdown of 30% on 10 lakhs, which is 3 lakh rupees, is not the same as drawdown of 30% on 10 crore, which is 3 crore rupees.
Absolutely.
And it has something to do with your annual expenses. When it becomes too bigger, if you start losing SUV in a day, let's say SUV costs you 30 lakh rupees. If you start losing 30 lakhs in a day, and then second day you lose another SUV, third day, because it might happen, right? It affects you more. That's me. I mean, it might not be same with everybody. So like 3 years back,
I'm sure it is. Yeah. Sorry.
Yeah, it is with most of the people at the retail level, because in institutional level it is so distributed that you don't feel it, and it's not your money. But so last 3 years, my whole focus was to reduce my drawdown, not to make greater returns. And last year, as I said, I made only 20%. That I made with less than 5% drawdown. Okay.
Nice.
So the idea was to reduce the drawdown. Now, in that quest, I decided that why don't I diversify with other traders who are better than me? So I gave my money to 8 different traders.
Okay.
Started with equal amounts, and then I, depending on who was doing better and all, I increased the allocation and so on. So I realized that having less than 5% drawdown, I'm able to generate more than 50-60% return, and the year is not over yet. Okay.
Excellent. Yeah.
Then the idea came that, I can have my trading firm where I will have multiple traders working on multiple different strategies, and they will be managing my money. And if I do it successfully, then they'll be managing money from outside as well. So basically an AIF or PMS kind of a thing. So that is the roadmap I have thought about myself 2 years or 3 years or 4 years from now. Here I want to thank the Twitter universe because it opened my eyes that larger, returns are really possible. And I have interacted with those traders in real time, and I have seen that somebody is making 100%, somebody is making 200%. For example, last year Parvan Arora made 400% return on
Wow.
crores of capital.
Wow.
Wow.
400% in a year, right? I have never made 400%. So I can tell you, like, there are gifted traders, so I'm trying to collaborate with them. And the
Excellent.
future idea is, and second thing is, I think the future of trading in India is going to be algo trading.
Right.
Manual traders will be like in museums. Oh, dekho beta, wo manual trader hua karta tha. Because execution is the king. Execution is the real holy grail, and
Yeah.
we are losing it like day by day. I mean, the way market is moving and so on. And in algo also, a simple algo will not survive. For example, there are a couple of guys working in Google and all. They have devised such order slicing mechanisms and things like that. That zero slippage on 5,000 Bank Nifty or things like that. There's zero slippage. Not in one order. Anytime there is zero slippage. 20 orders a day, zero slippage. That's possible. People are doing it. So I'm saying that is going to the future, and I want to be part of that future now, right? Because thanks to Twitter, now I see that. So that's the idea, basically, to venture into that and
The power
working
of
with
social media
like-minded
when
people.
it's used for the right things, right?
Yeah.
Can really
Yeah, I mean,
open
I
up.
have benefited immensely. I have came across 3-4 strategies in both Nifty and Bank Nifty purely from screenshots.
Okay.
If I can take a name, I mean, I used to follow Madan Kumar's screenshots, like really. I used to work on it. I used to match it with the chart and all. He gives a trade log as well, right?
Yeah.
Right.
The order book or something like that. He used to give the Excel sheet when he's taking the trade, when it is non-trade. So I did like entire R&D, all his Q&A, all his blogs, all his answer to tweets. I did all that. Like, I made notes, and I came up with my own strategy, which is like entirely from Twitter.
I think Shreyas, we are hearing this Madan Kumar's name quite a lot, right? Like we might have to
it's
call
the
him.
second time it's come up.
Yeah.
We'll have to get in touch with him as well.
But he's an extremely private person. I mean, I have never interacted with him personally. I've never attended his course. But yeah, I mean, what he shares and that kind of discipline he shows is immense, and I have huge respect for the guy.
Absolutely. I mean, that's the thing, right? So one of the abilities that one needs to have on social media is to be able to know who is worth spending your time on and who is not, because there's so much noise. And initially, when someone's new, they don't know who is
Genuine,
legit, who can learn
legitimate,
something
yeah.
from them, and who is just like a waste of time. It becomes difficult to filter initially, all of that. But awesome, superb. It was so nice talking to you, Anand, and just listening to your journey and everything that is going on at this point of time. And something that's evident is the nature of markets, the nature of trading. It never stays the same for too long.
Yeah.
It's changing. You're constantly adapting, and really such a pleasure for doing this. Thank you.
One thing that someone has to take away from this podcast is the way he has diversified. I mean, there are people who diversify. Okay, I'll trade my money, but I'll diversify my money into different strategies, the capital allocation. But Anand bhai has gone one step ahead. Okay, I'm gonna diversify by giving my money to different traders themselves. So that's a different way of diversification. So
I'll add to that. See, the thing is, I see that a lot on Twitter as well, that people take trading as a ego game, that I am the best.
Yeah.
Very true.
When I realized that I am not the best, I started making more money. So the idea is to have more income rather than to be the best trader, right? And that realization, I was talking to a very seasoned trader, and I told him that the market has changed in such and such a way, and why don't you do like this and do like this as an idea. He was not ready to listen. People think that what they are doing is the best.
Correct. Yeah.
So this having this open mind for a trader is very important, and then probably you will start doing better than what you were doing yesterday. Maybe not the best in the market, and no one needs to do the best in the market. Just do better than what you were doing yesterday or what you were doing last year, and it's a compounding effect on personality as well.
Couldn't agree more. Yes, Anand bhai, it was really great having this conversation with you. And I mean, the kind of expertise you've got in different fields, different markets, different segments and all that. I think this 1.5 hour podcast is not enough to get all the juice out of you. Definitely we'll have another podcast. If not on YouTube, we'll have a Twitter Spaces as well. So it was amazing talking to you, and thanks for your time. Looking forward to having more conversations with you, Anand bhai, and thanks a lot for coming here.
Thank you, both of you, Praful and Shreyas, and it was wonderful talking to you. And don't cut it out what I'm going to say. That Praful eats pizza, full medium pizza, and he has 6 packs. Yeah, he'll do a podcast on that. It has to be part of it. Yeah. Thank you so much. It was fun.
Awesome,
Okay.
awesome. We will catch up offline as well. Thank you so
Yes.
much, everybody, for watching. I hope this was insightful. It was tremendously for me, at least, and Praful as well, I'm sure.
Of
So
course.
thank you for watching, and we'll catch you at the next one. Take care.
Bye bye.
Bye bye.
Bye bye.